The first one's not a financial reset. The first one is a man-made reset. In other words, it's an edict. It's a reset where those in power still retain power. But the first reset will be somewhat like moving the deck chairs around on the Titanic. It won't work because the currencies themselves are still fiat. And we're going to have to get to the point where currencies there's confidence in currencies because they have real backing. And I guess another way to explain it is, right now, if you sell an ounce of gold or you sell an ounce of silver, you're going to get dollars for it, or you're going to get yen or euros or pounds or rubles or whatever, but you're going to get paper currency. So you're back in the system. The second reset, that's when people, at this point, there's no sense in selling your gold or your silver because you're not getting anything real in return. But upon the second reset, once there's a currency that can be trusted, that is backed by something real, and more than likely gold/silver, then yeah, you can, with confidence, liquidate your gold, put it into currency, and then use, your currency for whatever you need it for. But the point being, you're not going back into the frying pan of a fiat. You're not giving something away that's real for something that's fake. You're trading something that's real for something that's backed by something real. Very similar to what the United States had before 1933 when we were on a true gold standard. And I mean, there's been talk for quite a few years that they're going to try to do it with the SDR. And the problem with that is the SDR is what? A basket of fiat currencies. Whatever the first reset is, it will not hold because it's not going to truly be a reset. It'll look like one on the outside, but the guts of it will not truly be a reset where somebody goes to work, gets paid at the end of the week, and they get something that's sound money, if you will. Everything financial is worth nothing. And the reason being, I mean, look at a 30-year treasury bond or a 10-year treasury bond that pays, less than 1% or pays 1.5% or whatever. If interest rates were to move just 1%, it would destroy the value of these things. And during the time period or the term of the bonds, what do they promise to pay you? They promise to pay you dollars. And you just got done saying that since January of 2000, the dollar has lost 87% of its purchasing power versus gold. So if you bought a 30-year bond in 2000, and back then you probably had, if my memory served me correctly, you probably had 5% or 6% yield. So yields have crashed and the bond has gone way up in value, but in dollars. And those dollars have lost 87% of their purchasing power. So unless the bond has gone up 87%, which they haven't, you've lost purchasing power, even though on paper it looks like, wow, it was a home run. So that's what I'm talking about, is that everything financial that promises to pay you in fiat currency is going to be wiped out for two reasons. And the two reasons are, when interest rates do finally normalize, because you have to, in order for a currency to truly have value, you have to be able to lend it and get paid interest on it. And that's not the case today. And then the other part of the equation is that when interest rates do normalize, the entire credit structure is going to be crushed. If pension plans across the board were to try to put 1% of their assets into physical gold, they would completely dry up the market. There wouldn't be any physical to buy. They'd clean the supply up.
Yeah, that's a crazy scenario to think about. And all of these factors kind of lead me to something that your partner Jim Sinclair came up with, is GOTS. Can you tell us what that stands for and a little bit about it?
Yeah, Jim came up with that, thinking it was back in 2004 maybe. It stands for get out of the system. And what he was and is an advocate for is basically getting your capital under your own control, whereas you don't have the liability of someone else. If they go bankrupt, you lose your money, i.e. your broker. If they're holding your stocks and they go bankrupt, it might take you 5 years to get your stock back. If you have an annuity and the insurance company goes bankrupt, what does that mean to your account, or what does that mean to your monthly check if that's what you're taking? In other words, he was an advocate of, if you own stock, have them issue the certificate so you have it in hand. That's your proof that you own it. And the entire world could go bankrupt, but you're still that portion owner of whatever company that certificate represents. And as far as gold and silver, you don't purchase gold and silver and hold it in an unallocated account, a pooled account, because who's to say that the gold is really there? And if that company were to go bankrupt, again, you have the problem of going through the court system in order to get or re-get control of your capital. Whereas an ounce of gold or an ounce of silver in your hand or in a private non-bank vault, you know it really exists, you know that it's real physical metal, and you have access to it. So basically what he was getting at is, as to the best of your ability, become your own central bank, become your own depository.